Jim Gore from THOR Wealth Management. We are seeing a pretty dramatic change in the markets, and we're not talking about the stock market. We are talking about the bond market and inflation expectations. If you look at the 10-year Treasury, and so far since August, we've gone from 0.5% to 1.13%, almost doubling the yield on the 10-year Treasury. Now, still, it's very, very low, but you can see the dramatic increase just in the last week as we've seen interest rates go up here in the United States. Part of the reason why that is occurring is you have to look at inflation expectations. People were not expecting inflation to rise. If you go back to this chart, looking back in March, when we were at the bottom, people didn't expect inflation, so rates go down. Now the expectations are we're going to have annual rate of inflation over the next 5 years of 2.05%. What's very important is that historically, the 10-year Treasury has given you a yield in excess of the inflation expectations. It is not the case right now. So even with rates being so, even though they've gone up, they can go up still more dramatically because people are expecting inflation. And a telltale sign of inflation is something that we talked about before, which is the US dollar. If you go back to our market updates, especially last year in the fourth quarter, looking at the Big Mac index, and I suggest you go to our website and look at that, we were talking about the dollar being overvalued. The dollar usually goes in trends, and it could be usually they're long-term trends. And you look at this trend since 2011, the US dollar has increased in value, and there's been a good trend line. However, we did break that about a month ago, and technically this is a very bad sign, and it means maybe a shift in the trend line that the dollar is going to go down, which would be what has happened historically. If that happens, the dollar continues to fall, inflation will go up because we buy a lot of goods from overseas, and guess what? It's going to cost us more dollars to buy the same thing in yuan that it does today. There's a lot of things out there that this could have ramifications for your portfolio. Specifically on the fixed income side, this is a time that you do not want to be long US Treasuries. You have to be very short-term oriented, and we're doing some things at THOR that are outside the normal fixed income box to protect our clients. If you have any questions or you need any help from THOR looking at your portfolio, as always, reach out to us, give us a call, and we'll see what we can do for you.